It was the top thing that was spoken about in real estate the last 8 to 10 months. It was the thing that was on every buyer's mind when they even thought about buying a home. And it was the one thing that affected sellers across the board in terms of their plans and their strategies to sell their home and get their equity out of the home. It's been the hottest topic in real estate the last 8 to 10 months. And I'm here to tell you that in the last 30 days, I have seen this topic go from top 5 things that are spoken about on a daily basis to not even making headline news anymore. This is your May monthly market update. And my name is Adam Oduwumi. I'm the founder and CEO of Uprise Real Estate Partners. And we are going to bring to you the market updates of what's happening in the Central Texas area. You're going to want to stay tuned and you're going to want to listen on how what was the biggest news the last 8 to 10 months isn't even really a big factor now with buyers and sellers. So let's get into it, okay? So as you guys know, for your May monthly market update, we're gonna be reviewing statistics from the month of April, right? And then we're also gonna be comparing those statistics to the month of March. So it gives us kind of a look as far as what's happening in the real estate market, okay? Now, in the month of April, we had a total sales of 2,901. 2,901. In the month of March, we had 3,129. So here's what's funny. In the month of March, we saw a huge increase in the total of sales from February, January, December, March, November, October, September. It was the biggest jump, right? It was the highest number. And so we actually had a little bit of a dip in the month of March. It was still more than all the other months. So 2,901 total sales. For average price of homes, it was 372,810. 372,810, okay? In the month of March, it was 366,834. So we literally saw the average price of homes go up, not down, not down. Everybody that told you prices were gonna go down, real estate was gonna crash, it's not happening right now, okay? The average price of homes actually went up in the month of April, okay? Let's see how the median price of homes did. In the month of April, the median price of homes went up to 320,000, okay? If you saw our market update video from the previous month for March data, the median for March was only 314,000. You round up 315,000. So we literally saw a $5,000 bump in the median price of homes in the month of April. Yeah, you say, Adam, why do you keep saying yes? Why do you keep referencing? Because we say this every month, guys. While the news tells you one thing, it's best to get your information in terms of a local market from those who have their finger on the pulse of the local market and who are doing enough deals and activities to tell you what's coming, because that's what we've done, right? For example, I'm gonna tell you what we're seeing and feeling this month so you know what's coming 2 months from now, right? So you can prepare and you can strategize. I mentioned earlier at the beginning of the video, one of the biggest things that have been talked about from the beginning of this year and mid last year has been interest rates. And guys, for the first time in over 8 to 10 months, I'm noticing that the topic of interest rates is, in terms of dominating conversations, or, let's say the last 8 to 10 months, interest rates have been part of the real estate conversation 95% of the time. Now it's probably like 60, to be honest with you. 60, Adam, what are you talking about? I'm not talking about the news. I'm talking about when we're receiving phone calls. I'm talking about when we're doing consultations with buyers. I'm talking about our internet hit. I'm talking about our marketing on our listing. I'm talking about our ads for buyers looking for properties. I'm talking about introducing and connecting buyers to lenders, and we're facilitating those conversations. The topic of interest rates has reduced, and you know what has increased? What can I afford? Number one. Number two, what can I get for this amount? At the end of the day, because what happened last year was the sticker shocker, right? It was like years of low interest rates, pretty much no interest rates from the Fed, very, very, very low mortgage rates, very cheap money, to, oh my goodness, we literally did a 180 switch and we just turned everything upside down on purpose. The government did this. And it was the hot topic because it literally was bringing the real estate market to a screeching halt, right? Again, it was intended, it was on purpose. But coming into this year, I told you guys on previous videos that we started noticing that the sticker shocker with buyers for this year was decreasing, because they were like, look, we still have kids, we're still getting married, we're still getting divorced, we're still moving for job relocation, we're still paying high rent. And now if we're gonna pay that much money, might as well own it and gain some equity over time and get some appreciation over time. Might as well have it be ours if we're going to pay this amount. Those things didn't change. And so once the shock factor, once people got enough time to grieve, right? Once enough people got time to grieve not having 2%, 3%, 4% interest rates any longer, well, now you can process with what? The new normal, right? And then at the same time, you had builders that would, kind of inflate prices so they could work everything in and allow you to do buy downs and buy down your interest rate and things of that nature. And then, we had the 3-2-1 buy down, the 2-1 buy down for sellers and buyers to start having transactions happen more frequently in the months of February, March, and obviously April. And so that's what we're seeing, guys. That's what you're seeing. And so why am I telling you this? I'm telling you this because if you or your friends and family have been afraid to do something in real estate because of the hot topic of interest rates, now it's time to understand the new normal. Now it's time, like we've been saying every month, now it's time to start understanding where are the windows of opportunity in this current market, right? So let's keep going, guys. And I got some more for you at the end, okay? So I told you about the pricing, right? There are a lot of people that said that we were going to have, the Fed was going to be lowering interest rates right now. Not happening. A lot of people said last year that prices would be so much lower and the real estate market would be crashing and this would be a great time to buy from the investment property. Not really happening. Now, do we find opportunities? Are we helping investors buy properties right now? Absolutely. Why? But it's not because of the overall market and everything is just going down. As you saw, prices are going up. It's because we know where the windows are. We know where the landmines are. We know the landscape of the territory. So we know where to exploit certain things and take advantage of the market for both investors, buyers, and sellers. Again, I mentioned to you guys at the beginning of the year that this year we're going to see a sideways trajectory for the real estate market. And so with that, there's going to be opportunities, and sometimes windows are open and sometimes windows are closed. So that's why it's so important to have a team that understands the pulse of the market. So let's keep going. Next, average days on market. Check this out, guys. So we had 70 in the month of April. 70 days on market was the average days on market. Do you remember what it was for March? It was 72. So not only in springtime are we seeing the average and the median price of homes go up, we're also seeing the average in our market just decrease by just a little bit. And you say, what's the reason for all that, Adam? Guys, again, you have to remember, during the last big crash, besides all the subprime stuff, besides all the factors of the economy that weren't looking good, the biggest influencer to what happened in the last crash was an oversupply of inventory. All the foreclosures that hit the market, right? That's what caused that. Right now, we still have record low inventory. Like, people have so much equity still in their homes that even if they get behind on payments, they can take a home equity loan. They can get refinanced. They can do a cash out refinance. They can sell their home and rent moving forward. So we're not seeing the flood of inventory to the market. So we still have low inventory. So while with new home builders since last November, but with resale homes since really February and March, what we're seeing is where buyers are able to negotiate way more than they were last year and get more favorable terms than they could before. You're having more buyers now come on the market because of spring and summertime, but the inventory, we'll actually look at it, it's increased, but it hasn't like dramatically increased. And so now you're still back to a supply and demand situation, right? And that's why you see prices going up. Let's look at price per square foot. Here we go, guys. You know I'm not lying. Average price per square foot in the month of April was $179. In March, it was $177, $179, $177. There we go. Let's keep going. Months of inventory. We currently have 3.3 months of inventory. In March, we had 3.2 months of inventory. So a little bump there, okay? I expected that naturally because we knew that a lot of sellers who knew they wanted to sell their home, but they didn't prepare to do it during the holidays, we knew that they were gonna do what needed to be done the first couple of months of the year to get it ready for the spring. And then the average rental rate for the month of April, we got 1,848, 1,848. That's an increase, another increase from the month of March, which was 1,815. Rentals are going up. Sales are going up. Let's keep it going. New listings, we have 4,120 listings in the month of April. Now, that is an increase from the month of March, only 3,995. But really, guys, that's not that much of a difference. That's like 130, 135 homes, something like that, right? All right, let's keep it going. Active listings, we have 9,556. In the month of March, we had 9,285. A little bit of a bump in terms of active listings. In the month of April, 2,953. In the month of March, 3,073. We're seeing an increase, just a little bump, a 2% bump in terms of the amount of homes sold between, less than 200,000, between 200 and 500,000, and over 500,000. We're seeing a 2% bump in the amount of homes that are sold between 200 and 500,000, a 2% decrease between 200 and 500,000, and a 2% increase over 500,000. What does that tell you? That means that buyer confidence is creeping back. For those of you who follow us and looked at last month's market update video, do you remember me talking about when the Fed decided to only raise the Fed rate 0.25%? Why I thought they were doing that? I mentioned that I thought they were doing that on purpose because they want to drop the hammer, but they don't want it to look like it's their fault. And reports came out that inflation was lower than expected. So they supposedly, instead of raising it 0.75 or even 0.25, I personally believe they did that on purpose to say, oh, it looks like everything's going according to plan. It looks like what we're doing has been working. So let's calm down for right now. Let's not do anything major for the next 3-4 months. And let's just ride things out. Well, we were already seeing buyer demand increase before they even made the decision. So I already told my team, I said, look, we're going to see a real estate boom over the next 4 to 5 months. There's a window of opportunity. There's going to be a real estate boom for the next 4 to 5 months. And what's going to happen is I believe they're going to let inflation ride up again, because if buyers are like, wait, I have a need and now you're telling me the mortgage rates are kind of stable right now. Oh, let's go. And let's go ahead and buy a house before they go up again. And so you're going to have a frenzy and the supply and demand issue. So I believe what's going to happen is either in the fall and the wintertime, the Fed's going to go, oh my goodness, inflation's out of control. Demand has crept back up again. We got to calm things down, but we got to be more aggressive because we weren't last time. And then they'll drop the hammer, push us into a recession, and then we'll go into next year. And so we're seeing that, right? We're seeing buyer confidence come back slowly for even homes over $500,000 and into the luxury market. If a home is priced right and it's move-in ready, we're already seeing, and it's in the area that's in demand, we're already seeing multiple offers. And I mentioned that 2 months ago. And so why do I say all this? If you're a seller, okay? If you're a seller, you have another window of opportunity. You had windows last year to sell your property and make the most amount of money. Then that window closed for a period of time. It was very slow, but end of last year, beginning of this year. Now you have another window. And just know that windows don't always stay open. They're typically closed, but then they're open. So if you're a seller and you have a property that you're looking to not hold on to for at least 3 years, you may want to think about putting on the market this year and getting your equity out. If you're good, if you're willing to hold on to it for another minimum 3-4 years, you're good. Just wait till the market comes back, all that kind of stuff, right? So that's how you want to look at things from a seller perspective. So again, price your home right, get it move-in ready, fine. If you're a buyer, now is when you want to start trying to be strategic again. Depending on if you're looking in the area that's in high demand, you might have to start doing things again to win offers in multiple offer situations. Are we seeing 15, 20 offers on properties? No, but we are seeing 3 to 5 offers on a given property on average. So you kind of have to be prepared for that, kind of have to be ready for that. We'll see, but if you're looking in the high demand area, I don't know if you're going to be able to get 3-2-1 buy downs and 2-1 buy downs rate if other buyers are interested as well. Now, if there's no offers, go for it, right? Try to negotiate that thing. So just be mindful there, but you want to be strategic about making sure that you're getting the best home you can, the best bang for your buck, but still getting terms that you can work with and also help you win deals. If you're an investor, there are some opportunities right now. I mentioned last video that I think more of the opportunities are going to be later this fall or winter time or beginning of next year, depending on what the Fed does. But if you're out of the market and you're waiting till the news tells you to get in the market, you're already too late. You're already too late. And so it's best to be in the market and be patient. Be in it and be patient. So when this thing turns, you're already scooping up the cream from the crop because you're already in it, as opposed to trying to get ready and being too late. So I hope this is value to you guys. I hope this is a blessing. We do this every month. And so if you know anyone, yourself, friends, family, that needs some advice, that you want someone to help answer your questions from a trusted advisor standpoint, not just from a salesperson standpoint. If you have a situation, problems, issues, obstacles, and you want help overcoming those things or being strategic on how to overcome those things, reach out to us, right? We're here to help. We're here to give value. I don't care if you're across the country. We have a big network across the United States, so feel free to reach out to us. We'll put you in trusted advisor either here locally or where you are currently at. Other than that, guys, keep following us. Stay tuned. Check out our social media channels. We got more content coming to you, and I love you. I appreciate you. See you soon.